What Ripple just did in the US could seriously affect XRP holders. What is going on, XRP Army? Welcome back to the channel. We need to have a serious, uncomfortable conversation today. If you are looking at the charts, you are seeing the red. We have pulled back from the January highs of 240 down to the 160 range, and the sentiment on Twitter has shifted from moon to panic almost overnight. But the price drop isn't the only thing keeping holders awake at night. There is a specific strategic move that Ripple just made in the United States, specifically the launch of the new Ripple Treasury platform that has sparked a massive wave of worry across the community. The narrative spreading right now is dangerous. Is Ripple replacing XRP with RLUSD? Is the company pivoting to become a stablecoin bank and leaving the XRP token behind? In this deep dive, we are going to confront these fears head on. We are going to look at why the Ripple Treasury launch has people terrified of cannibalization, why the recent ETF outflows are adding fuel to the fire, and then, most importantly, I am going to show you the hidden mechanics that prove why this fear is actually the biggest bear trap of 2026. Let's start with the source of the worry. The Ripple Treasury launch. On January 28, 2026, Ripple officially launched its corporate treasury platform powered by G Treasury. This is a massive product designed for Fortune 500 CFOs. But when you read the press release, what is the star of the show? It's not XRP, it's the Ripple stablecoin, RLUSD. The platform is pitched as a way for corporates to move dollars instantly using RLUSD. This has led to a valid concern. If banks and corporations can just move stablecoins on the ledger, why do they need XRP? The cannibalization thesis says that RLUSD will eat XRP's lunch. It argues that XRP's primary use case, cross-border settlement, is being hijacked by Ripple's own stablecoin. When you combine this with the fact that Ripple is heavily marketing RLUSD to US banks now that regulatory clarity is here, it feels like the golden child, XRP, is being neglected for the new baby, RLUSD. We need to talk about the ETF warning sign. For the first time in 50 days, we saw net outflows from the US spot XRP ETFs in late January. After billions of dollars flowed in, the tap suddenly turned off, and we saw a $40 million outflow day. Why does this matter? Because it signals that institutional investors might be pausing to digest this new strategy. They are asking the same questions you are. Does the stablecoin make the volatile asset obsolete? When Wall Street pauses, the price drops. That is exactly what we are seeing right now. The correlation between the Treasury announcement and the ETF pause is not a coincidence. Institutions hate uncertainty, and right now, the relationship between XRP and RLUSD feels uncertain to the uneducated eye. Furthermore, let's look at the price action psychology. We are currently trading below the key 50-day moving average. For technical traders, this is a bearish signal. It suggests that the momentum from the legal victory rally of late 2025 is fading. The fear is that we are entering another multi-year accumulation phase while Ripple builds out this new stablecoin infrastructure. Holders are worried that they held for 7 years for the lawsuit to end, only to be told they have to hold for another 5 years for the stablecoin era to mature. It is exhaustion, it is fatigue, and Ripple's pivot to banking-grade stablecoins feels like a slap in the face to the retail army that kept the lights on. But, and this is a massive but, this fear is based on a fundamental misunderstanding of how the XRP ledger works. If you stop reading the headlines and start reading the code, the story changes completely. Now, let's pivot to the reality check. Why is the Ripple Treasury launch actually the most bullish thing to happen to XRP in years? Because you cannot move RLUSD without XRP. It is technically impossible. XRP is the native gas of the network. Every time a CFO at a Fortune 500 company moves $100 million in RLUSD using the new Treasury platform, they burn XRP as a transaction fee. You might say, but fees are low. Yes, they are. But we aren't talking about retail volume anymore. We are talking about high-frequency corporate treasury management. We are talking about millions of automated transactions a day. This creates a baseline burn rate that we have never seen before. It turns XRP from a speculative coin into a deflationary commodity that is required to run the US financial system. Let's discuss the bridge asset physics. The cannibalization thesis ignores one major fact. The world doesn't just run on dollars. A US company might hold RLUSD, but they need to pay a supplier in Mexico, Brazil, or Japan. There is no Ripple peso or Ripple yen with deep liquidity yet. So how do they get from RLUSD to Mexican pesos instantly? They use the XRP Ledger's auto bridging feature. The ledger automatically sells RLUSD for XRP and then sells XRP for pesos. This happens in 3 seconds. In this scenario, RLUSD doesn't replace XRP. It increases the velocity of XRP. RLUSD is the on-ramp. XRP is the bridge. The more RLUSD grows, it just hit $1.4 billion market cap. The deeper the liquidity pools for XRP need to be to facilitate these swaps. We also need to look at the Standard Chartered reiteration. Amidst all this panic, did you see what Standard Chartered released? They reiterated their 8.00 price target for XRP by the end of 2026. Why would a major bank predict an $8 in XRP if RLUSD was going to kill it? Because they understand the collateral play. As institutions hold billions in RLUSD on the ledger, they will look to earn yield on it. To engage in institutional DeFi on the XRPL, which is part of the 2026 roadmap, they need to bond XRP as collateral. This locks up supply. The bank analysts know that a successful stablecoin ecosystem effectively traps value on the ledger, and the native token captures that value accretion. Furthermore, let's address the ETF outflows. The $40 million outflow was a blip. In the grand scheme of the $1.5 billion that flowed in, it is noise. Profit taking after a 100% run-up is healthy. What is more important is that the infrastructure for the ETFs is expanding. We are seeing custodians like Zodia and Komainu integrating with the new treasury platform. This means that in the future, an ETF manager could actually stake the XRP in the fund to earn yield from the treasury operations. This would turn the XRP ETF into a yield-bearing product, which would attract trillions in capital. The worry about outflows is short-term. The structural build-out is long-term. Finally, look at the CEO's statement. Brad Garlinghouse explicitly stated in his 2026 kickoff that XRP remains at the core. Why? Because Ripple holds nearly 40 billion XRP. It is their balance sheet. It is their war chest. If they kill XRP, they destroy their own company's value. They are incentivized to make XRP the most valuable asset on the planet. The treasury push is simply a way to get the banks on the hook. Once they are on the hook using RLUSD, they are in the ecosystem. And once they are in the ecosystem, they are using XRP. So why Ripple's latest action has holders worried? They are worried because they don't see the full plumbing. They see a new shiny object, RLUSD, and think the old object, XRP, is dead. This is exactly what the smart money wants you to think. This is a shakeout. The price drop to 160 is designed to flush out the people who don't understand the utility mechanics. The institutions are buying this dip. They are reading the Standard Chartered report, not the angry Twitter threads. What is your strategy? First, zoom out. We are still up significantly year to date. The trend is still bullish. The 155, 160 level is a massive support zone. If you are a trader, this is a high probability bounce zone. If you are an investor, this is where you accumulate. The Ripple treasury isn't a threat. It's the Trojan horse that brings 300 million corporate accounts to the XRP ledger. A critical warning. Do not let narrative exhaustion cause you to sell the bottom. We have seen this before. In 2017, people sold because banks are building their own blockchains. Then XRP ran to $3.84. In 2021, people sold because the SEC lawsuit will kill it. Then it ran to $1.96. Now, people are selling because RLUSD will replace it. Do not be on the wrong side of history for the third time. The fundamentals have never been stronger. The bottom line is this. The worry is real, but it is misplaced. Ripple is building a financial super app for banks. RLUSD is the checking account. XRP is the settlement rail. You need both. The launch of the treasury platform is the signal that the pilot phase is over and the commercial era has begun. Ignore the FUD, watch the transaction volume, and hold your position. Thank you so much for watching this urgent update. If this video helped calm your nerves and clarify the RLUSD situation, please smash that like button. It helps us fight the fear. Subscribe and hit the notification bell so you don't miss the next update when the price reverses. Stay strong, stay educated, and I will see you on the moon. Peace.